All right, good day. Hope that you're doing good. Now, in this video, we're going to be doing calculations relating to the fixed asset note, right, from your previous question paper. Now, we're going to be using the given information to try and calculate these missing values on our fixed asset note. Now, the first value we need to try and calculate is the carrying value at the beginning of the year for our building, making use of the information we are given here. All right. So remember, your building does not depreciate, right? So here we are given carrying value at the end. We want to take this carrying value at the end. We're going to subtract our additions to get the carrying value at the beginning of the year, right? And remember, your carrying value at the beginning of the year is the same as your cost, right? Same applies to your carrying value at the end of the year. It is the same as your cost. Why? Because your building doesn't depreciate. So to calculate the first carrying value of our building, we need to take the carrying value at the end of the year, which is 7,690,200 minus the additions at cost, which is 864,200. And our carrying value at the beginning of the year, it will be equals to 6,826,000. Right. Now, the preceding question wants us to calculate the carrying value at the end of the year for our vehicles, right? And how would we go about doing that? Now, with regards to cost as well as accumulated depreciation, there is a formula that I go about using, right? Or that the formula that you need to go about using. So for the purpose of this example, we're going to do the formula of calculating your accumulated depreciation. So you need to take your accumulated depreciation at the beginning of the year. Right? You need to subtract your accumulated depreciation at the beginning for your disposal, right? If there was any disposed fixed asset, and you need to add your depreciation for the current year. And this would be equals to your accumulated depreciation at the end of the year. Now, taking this into consideration, let us try and calculate the carrying value at the end. Because remember, to find your carrying value, you need to take your cost and minus your accumulated depreciation. In this case, we have our cost at the end of the year, which is 1,120,000. Now, making use of this formula, we need to try and calculate the accumulated depreciation at the end of the year, right? Now, let us go about doing that. So do we have accumulated at the depreciation at the beginning with respect to vehicles? Yes, we have 469,100. So let me write it here. So we have 464,100. Now, was there any disposals with regards to vehicles? There wasn't any vehicles disposed, so subtract 0. And the depreciation for the year was correctly calculated as 144,400. So we need to add 144,400, and this would be equals to our accumulated depreciation at the end, right? And remember, we need to take the cost and subtract this accumulated depreciation to find our carrying value at the end, which is what we're trying to calculate, right? Now, let me punch this into my calculator. Now, my accumulated depreciation at the end is equals to 600, right? So let me just write it here. My accumulated depreciation at the end is equals to 608,500. Right? This is my accumulated depreciation at the end. And remember, I said I need to take my cost at the end of the year. So I need to take 1,120,000. And I need to subtract 608,500 to find my carrying value at the end, right? 1,120,000 minus 608,500, and this would be equals to 511,500. This is our carrying value at the end of the year. Now, because this was highlighted, it doesn't mean that you cannot make use of it, right? As long as it would be helpful for you, or rather, as long as this video would help you to calculate your carrying value, you can try to calculate it so that you can find whatever the question is asking you, right? Now, let us move on to the next question. Now, before we can look into the next question, I just quickly want to show you another formula that may be helpful to you with regards to calculating the cost of anything, right? So this is the cost formula. In order to go about calculating the cost of anything, right? Well, in order to go about calculating the cost of anything, you need to take your cost at the beginning plus your additions at cost minus the cost of your disposal. Now, this is important. We need the cost of your disposal. Your cost at the beginning plus any additions at cost minus the cost of anything you have disposed. This would be equals to your cost at the end of the year. Right. Now, this is a formula you can go about using in order to calculate the cost of anything on this table right over here. Whether it's the cost of your disposal, whether it's the cost of your additions, your cost at the beginning or cost at the end. So the reason why I'm sharing these formulas with you is that most of the time, most of these values which are missing here, you would need to try and calculate them using the values you're given in the table, right? Hence, I'm showing you these table methods in order to go about calculating any values. Now, let us move on to the next question. Now, for this question, firstly, we need to calculate the disposal. And remember, we dispose our carrying, and remember, we dispose our fixed asset at carrying value. So we need to calculate disposal at carrying value for our equipment. Now, first, let me write down my financial year. So in accordance to the information, my financial year ends on the 28th of February, 2023. So meaning that it starts on the 1st of March, 2022, up until 28th of Feb, 2023. Right. Now I can go about trying to calculate my disposal at carrying value using the information that I've given. So first, let me look on my additional information. Now, first, I'm being told that, all right, this is information relating to equipment. They say equipment is depreciated at 20% per annum on a carrying value method, right? Meaning that they recognize depreciation using the diminishing balance method, right? Now, movement of assets during the year. So here, equipment was sold on 1 January 2023. Now, I know that my equipment, right? So my equipment was sold on 1 Jan 2023 in accordance to the information. Now, first, let us determine for how many months was it present in the company. Now, remember I said my financial year starts on 1 March 2022. So it was there from March, April, May, June, July, August, September, October, November, December, right? So we don't include January. Reason being is that it starts on the 1st, or it was sold on the 1st, not on the 31st, right? So basically this was there for 10 months, right? Now, let's see what information may I get again with regards to the sold equipment. Detail of the sold equipment are as follows. Now, they give me the cost. So the cost of this equipment that I sold, because remember, I need to use the carrying value method whereby I need to take my carrying value, multiply it by my depreciation rate, which is 20%, and the number of months in which my fixed asset was present in the company. And in this case, I've already identified that as 10 months. So now the cost of this equipment sold is 90,000. And accumulated depreciation on 1 March 2022, which was at the beginning of the year, right? This is the accumulated depreciation at the beginning. They have given me as 38,160. Right. Now, using this information, I'm going to calculate my carrying value at the beginning of the year. And that carrying value at the beginning, I'm going to try and use it to calculate the depreciation for this year. Reason being is that, remember, we need to add the depreciation for this year on the accumulated depreciation at the beginning. From there, we can find the carrying value at the time of disposal. So let us go about calculating our carrying value. So 90,000 minus 38,160. My carrying value at the beginning of the year, it was 51,840. Now I have my carrying value. I can calculate my depreciation for my sold equipment. And in this case, it's my carrying value, which is 51,840 multiplied by 20%, multiplied by 10 over 12. And my depreciation for this would be equals to 8,640. Right. And remember, the reason why I was calculating this depreciation is because I needed my carrying value at the time of disposal, because this is the amount we need to recognize here. Right. So now let me go about calculating my carrying value at my time of disposal. So basically, my new accumulated depreciation for this at time of disposal, it will be the 38,160, which was the accumulated depreciation at the beginning, plus 8,640. And my accumulated depreciation at time of disposal would be equals to 46,800. Now remember, I'm looking for carrying value at time of disposal, right? So now to calculate my carrying value, I will take my cost of my sold, which is 90,000, and I'm going to subtract my accumulated depreciation at the time of disposal, and this would give me my carrying value at disposal, which would be 43,200. And this is the amount that they wanted us to go about calculating. My depreciation for my sold equipment for this year, it's 8,640. Right. Now, taking that into consideration, let us answer the last question, which requires us to calculate the overall depreciation for equipment. Now, every time whenever I calculate depreciation, I make use of the SUN method. So I first calculate the depreciation for my sold, then my old or remaining fixed asset, and lastly, for my new fixed asset. So now I've already done the sold, right? So I've already calculated the depreciation for my sold equipment before, which was 8,640. Now I'm left with calculating the depreciation of my old or remaining equipment, as well as the depreciation for my new equipment. Now I'm going to start off with my old equipment. Now, we're still using the very same depreciation method, which is the carrying value method. Now, we need to get the cost of our old, as well as the accumulated depreciation of our old. And as you can see in the information, there isn't any information which specifies what is the cost of our old equipment, as well as the accumulated depreciation of our old equipment. Now, always with regards to your old, where would you get information relating to it? You would get it from your balances at the beginning. So what do I mean by that? The cost of your old equipment, it will be your cost at the beginning, but from this cost at the beginning, you need to subtract the cost of your sold. Why? Because now we are calculating depreciation for the old or remaining fixed assets, and the one that we have sold are no longer remaining in the company. They are gone. Hence, we are subtracting them from our costs. Right? So hence, every time we start with our sold, we start with calculating depreciation for sold. Because in order to get information relating to your remaining, you need to take your cost at the beginning or your information at the beginning and subtract any information which relates to your sold fixed asset, right? So same applies with our accumulated depreciation. It's going to be our accumulated depreciation at the beginning minus the accumulated depreciation at the beginning also for our sold. Right. Now, let us try and identify these values here. So we're going to first start off with our sold, right? Or rather, we're going to first start off with our cost. So our cost at the beginning of the year with regards to our equipment. So now let's calculate the cost at the beginning of the year with regards to our equipment. It was not given, meaning that we need to calculate it. Why? We have the carrying value, we have the accumulated depreciation. We can calculate the cost, because remember, cost minus this accumulated depreciation, it will be equal to the carrying value. Now we need to work backwards, right? Meaning that my cost in this case, it will be equal to the carrying value. My cost, it will be equal to my carrying value plus my accumulated depreciation, right? So basically the cost would be 317,440 plus 302,560, which is 620,000. The cost at the beginning, right? You can also test this out by taking your cost at the beginning and subtracting your accumulated depreciation at the beginning to see if it will give you this carrying value that you are given here of 317,440. But for now, we have calculated our cost at the beginning as 620,000. Now remember, these calculations, you need to do them on your answer sheet in order to get marks, right? So now let us calculate the cost of our sold. So here, the cost of our sold equipment was given as 90,000. So I'm going to subtract 90,000 here. Now I need to do the same for my accumulated depreciation, right? So my accumulated depreciation at the beginning of the year, this was given. So let me put it in brackets. It was given as 302,560. The accumulated depreciation at the beginning for my disposed, it is 38,160 is given also. right? Now, overall, my cost 620,000 minus 90,000. So my cost for my remaining equipment, it's 530,000. And as of my accumulated depreciation for my remaining, it will be the 302,560 minus 38,160, which is equals to 264,400. And remember, we need to subtract this. Now we can subtract the two to get the carrying value of our remaining equipment. So 530,000 minus 264,400. Our carrying value for our remaining equipment is 265,600. Now remember, we need to try and do what? And calculate depreciation for our remaining using this carrying value, right? And remember our depreciation method, we need to take our carrying value, in this case, which is 265,600, multiply it by the depreciation rate of 20%. And always your old, it's there for a period of 12 months. So multiply by 12 over 12. And let me punch this into my calculator. And your depreciation for your old remaining equipment should be equals to 53,120. Right? So here, for my old, it's 53,120. Now, lastly, I need to calculate the depreciation for my new equipment. Now, let me see information relating to my new equipment. So from this table here, I could see that my additions on equipment is 0, meaning that there wasn't any new equipment which was bought during the year, right? So this simply means that the depreciation for my equipment, it will be equals to my depreciation for my sold, which is 8,640, plus the depreciation for my old or remaining equipment, which is 53,120. And now adding the two amounts, my depreciation for my equipment, it should equals to 61,760, right? And that will be all for this question. Remember, if ever you have any questions, always feel free to reach out. Thanks.